Hello and welcome to this edition of SFG Top Performance. Today we're doing a feed and grain podcast. It's been probably a month since we've done one. We had some vacation time and some other things going on, so we got a little bit to catch up with. With me today is Scott Goetz, the feed manager for SFG, and Kent Watson, who leads up the feed team in Albia. And so we'll talk a little bit about grains first. In the time that we've been away, the USDA released their August WASDE report, which was expected to be a mover, and it was. They came in and lowered the corn yield about 5 bushel. Pretty dramatic for them, especially in the August report. So that took it down to 174.6. We didn't have a limit up trade that day, but it was close. But the next day kind of petered out, and since then, it's just kind of like the trade is not believing this number. And so they're reserving judgment, and that means they're liquidating their longs. And in essence, that means that we're looking at lower prices than we maybe expected. December corn today this morning was trading at 522. The question is, will it test the $5 range? And right now it appears it may as we start into harvest, and hopefully we'll find some reasons for it to go back up. On the bean side, they also lowered their number about 0.8 of a bushel down to an even 50. Now in both cases, corn and beans, they lowered the yield, but they also lowered the usage. And it's kind of their prerogative to do some things like that. So the bottom line didn't move near as far as you would think it would. And so we're looking forward to another report, the September WASDE report, later this week. And they came out earlier this week and announced that they will adjust the acres in this report. Normally they do that in October. That's when the FSA kind of has their final numbers ready. This year they feel that they're farther along. That might make a little sense because the majority of the corn belt got planted timely. There wasn't a lot of late planting. So they may be truthful here, but the question would be whether it's an atomic bomb getting ready to be dropped on us. Suddenly they raise the corn and bean acres 2 or 3 million acres and things like that. So I think the trade will continue to liquidate into this report, and then we'll see where we go from there. Some concerns currently, export demand. We're still waiting for China to come in and buy corn. They've been buying beans very regularly, but that was expected. It's nothing new. And the amounts are within reason of what they were expected to do to this point. There continues to be rumors they're going to buy corn again, but we haven't seen that. The COVID is rearing its head again with this Delta variety or variant, and we're seeing some slowdown in places, and so that's a concern of people. Are we going to quit driving as much again? Are we going to close up some places, things like that would damage demand? The damage done by the hurricane this past week in the Gulf states, particularly New Orleans, I know they missed the heaviest hit, but the port down there, it's still unclear how much damage they suffered there and how soon they'll resume normal shipments. For anybody that watches the river basis, this past week has been a disaster. The terminals have been sending out at least twice a day. They've been adjusting their basis, and it's always down or wider because the barges are getting backed up already. And so soon it's going to be availability of fall barges to get the crop moved out of here before the river closes. And that could be a major impact on prices. Fertilizer, same thing, getting fertilizer back up the river. Mosaic announced that they probably are going to lose 300,000 million tons, or 300,000 ton of production before they get their terminal back up and going. And so that'd be primarily phosphorus. Phosphorus is already on the expensive side, so that's not going to help there at all. And finally, we got normal harvest pressure. We expect corn to start trickling in maybe a little bit next week or this coming week, but definitely the week of the 13th, we think some guys will get started, and so we'll have that to contend with also. So just a lot of things have happened in the last month, and probably not a lot of positive things as far as prices. We're still, good prices for the commodities, but not near what we had this summer. So we'll just kind of strap in and see what happens in the next 3-4 months as we get through harvest. With that, I'll turn it over to Scott. He'll bring us up to date on some feed items.
All right, well, the weather's starting to make us think maybe fall's coming. Starting to see some corn and bean fields that are starting to change colors a little bit, and several guys have been chopping silage in the last week. Won't be long until harvest starts now. Our construction project over at Milo has been a struggle, to say the least. It's getting kind of tough to get anything shipped into you anymore, but new stuff keeps trickling in. We are somewhat operational now, but we still have a ways to go. Without too many issues, we should be fully operational by harvest. On the feed side of things, business is starting to pick up, which is normal for this time of the year. Got several guys that are creep feeding calves, and quite a few tubs starting to go out to supplement cows. I don't know of any calves that's been weaned yet, but I've had a couple early calving guys in talking about it. They'd like to get them weaned before harvest starts. And when we start thinking about weaning, remember, it's still not too late to start some creep feed to them. Creep-fed calves experience less weaning time stress, which results in better health and bigger weaning rates. Even a short period of time can be beneficial. Research shows that creep feeding 30 days before weaning will still reduce stress at weaning. 30 days of creep will get them accustomed to the energy in their diets, and it'll basically teach them how to eat. So when you bring them in the lot, they know what the food is. And a calf that's eaten at weaning is typically a healthy calf. If you do wean without any creep, I would suggest a preconditioning feed. SFG has several good choices. These feeds are loaded with nutrition and very palatable to get calves eating quickly. They all contain rumen buffers and trace mineral packs for optimal health. Most of these are high roughage, complete feed pellets designed to be fed 14 to 21 days and then transition over to your normal ration. You can give Kent or myself a call and we can discuss your needs and help you with your weaning plans. The last thing that I have is that SFG is doing a fall mineral booking for September and October. You can book your winter mineral and get 10% off. This is only on the Kent mineral. So if you're interested in saving 10% on your winter mineral needs, contact Ken or myself and we can get you fixed up. Kent, you got anything to add to that?
Well, yeah, I was just going to piggyback on what you were talking about on weaning these calves. Like I said, it's very, very vital that we get these calves started and eating well. That has a direct input on how their immune system will function. Generally, when you think of stressed calves, you think of like a decrease in immune system, poor appetites, which leads to less feed efficiency and loss of weight. And then with that comes sick, more sick calves and unfortunately some more mortality as well. And so we have some additional tools basically in the toolbox from besides what Scott had mentioned, and that's the use of these stress tubs. We've used them for a number of years. Generally, people that have used them in the past really like them and they come back and use them again. You talk to people about using these tubs and they usually figure, well, that's another incurred cost that maybe I don't have to use. So I kind of sat down the other day and I put some figures together just to sort of see what cost versus benefit you might get from these using these tubs. And what I've found is generally you'll see, and this is research and trials has been done, so it's based on a lot of different numbers, but they'll see about 68% fewer pulls and 50% less retreats on these calves using stress tubs versus not. When you look at today's cost of treatments, what these shots cost, I just sort of averaged them together, and there's about $22 to $23 a shot. So you can see, that gets pretty expensive pretty quick. And then if you have to treat these calves multiple times, basically you got a calf that sort of turns into a chronic, which really costs you money. And then also these tubs will reduce your mortality by about 50%. You lose one 500-pound calf, that's basically $700. So these tubs are really full of vitamins, minerals, electrolytes. It's that molasses base that gets them, they get real interested. They'll have a lot of licking action that helps buffer their gut and keeps the rumen functioning properly. With that, you get better feed intake, so you'll get up to about almost 4/10 of a pound increase in average daily gain. Today's market, that's about 53 cents a day increase. And then you get improved feed efficiency as well. So it takes about 6/10 of a pound less feed for every pound of gain. So you can see there's quite a bit of benefits you can get from feeding these stress tubs. Conversely, then what does these things cost? You put like one stress tub out for every 30 head, and it's for a 30-day window. That's all. You just get them through that first 30-day, that critical period of time. And with a 250-pound tub for 30 head for 30 days, it equates to about 12.5 cents cost per head per day. For a 30-day period, it costs about $3.75. So you can see for a pretty minimal cost, and I would say more of an investment, you can get some pretty significant returns. So I think it's something that a lot of people maybe need to take a look at, and I think it's something you'll see a really, really good return on your investment. So that's basically all I have.
Well, thanks, guys. That's a good advice as we get into that weaning period. It can be very critical for a cow-calf guy, and it kind of determines the final profit, you might say, in the business. So that'll wrap up today's edition of the SFG Top Performance. We look forward to coming back in a couple weeks and bringing you an update. Thanks for joining us.